This episode is brought to you by Audi. The road is calling. Embrace the thrill of the drive with the all-new, fully electric Audi Q6 e-tron. Featuring effortless power, serious acceleration, and advanced Audi tech. It's not just a new EV, it's a new way to experience driving. The all-new, fully electric Audi Q6 e-tron is here. The next chapter of Audi starts now.
This episode is brought to you by Peacock. The new Peacock original documentary, Matthew Perry, A Hollywood Tragedy, dives deep into the beloved actor's rise to fame and his tragic death. 5 people, including Perry's personal assistant, 2 medical doctors, and an alleged Hollywood drug dealer known as the Ketamine Queen, were charged with conspiracy to illegally provide Perry with the ketamine. Explore the details of the case in this heartbreaking special, streaming now only on Peacock.
Good afternoon, guys, and welcome to the podcast. I have Janna Scott here from DeFi Tax, and she is the founder and visionary behind DeFi Tax, and it's a platform designed to bring clarity and compliance to the complex world of crypto and tax reporting, and we'll hear all about it. And just for the disclaimer for the audience, none of the items here are investment or legal advice, and we're just bringing up topics of conversation and discussion. And as always, please do your own research when looking at these products, as they're extremely speculative and extremely risky. With that said, I'm happy to welcome her to the show. Janna, welcome.
Thank you so much for having me.
Yeah, briefly introduce yourself and we will dive into the questions.
Perfect. Yeah, I'm Janna Scott. DeFi Tax is one of my companies. Let's start at the beginning. I moved here from Germany about 20 years ago and got to go to school and then started the American dream. In between, I worked for the government. I worked as a tax specialist, fiscal analyst, financial consultant to oversee some of the State Department's financials, spending, federal treasury reports, etc. And then I decided government work was not for me. And I went out into the real world and I worked with a lot of different firms across the country and consulting. And eventually I said, you know what, I can do this better, more controlled, more educational. And I opened up my own tax and accounting firm and I work in a lot of different countries as well. I have my certifications to work in different countries. And a few years ago is when I had a couple clients come to me and say, how do I report my crypto taxes? And I had absolutely no idea. But the person I am, numbers person and obsessive, I went down the rabbit hole and I said, there has to be something out there. And I went and I had this little trading wallet that had maybe at that point 300 transactions, some trades, some buys, some sells, a good variety. And I took it and I connected it to 14 different products in the market, not just US products, but products from all over the world. And I was honestly at a loss because when I ran the reports, 1 + 1 is 2. It doesn't change. If you buy something for $5 and you sell it for 10, you have a $5 gain. There should be no discrepancy. IRS regulations are very clear. You receive crypto, it is income. You mine crypto, it is income. Unless you send it, it's pretty clear in that regard. Yes, there's more difficulty at the end. However, when I took these products, I connected the same exact set of transactions to every single product and received a different outcome, different capital gain, different capital loss, different income number for every single one. And not saying 7 of them matched, 7 of the others didn't. No. Every single one had a different outcome for my capital gains and losses and income. And I did it just didn't make sense, right? It should be the same type of math, inventory math, assets. It works. What I did is I went and pulled all the raw data from these exchanges. And then I went and built an API and used API keys and OAuth to pull the raw data actually from the blockchain directly. And I compared and I researched and I met with universities. I met with PhD professors from various universities, validated my findings, which is actually currently being published by multiple universities and should be. They're doing a research and peer review on everything and publishing it within the next couple of weeks or so. And I found out what all these products are doing wrong and how to do it right. Okay. Next step, I went to all the products and I said, I have this research. Take it and fix it. I don't want any money. I have the emails to prove it. I have the messages to prove it that I said, I do not want money. I found the mistakes. Yes, I want to give you the research, take it and fix it. 90% said, nope, we don't care, not our problem. 10% said, oh, let's meet. I was like, yeah, great. Met with them. And it ended up being them trying to sell me their product instead of actually wanting to understand what the issues are. So that gets us to today, the SEC and got wind of my research and due to the universities of my publications, etc. And we met with the SEC, 50 of the division chiefs, to discuss the issues we found. Their response was, oh no, this is sad. But we're not regulating crypto. We cannot do anything about this. But hey, let's get you over to the IRS. Let's get you over to congressional committees. So we met with the IRS. While talking to the IRS, we asked them what their processes are for the audits that they were currently ongoing in 23. And they said, now that we have your research, we realize our audits are inaccurate. So they actually paused the audits. And they're working with the universities, actually, that are publishing the research. And then we met with congressional committees to really outline, what the issues are and correct those. And I've kept it fairly quiet just because when I got to the point of the products not being interested, I wasn't going to give out a roadmap anymore. I said, if nobody wants to do this, I can see the damage that will be done when the audits happen and every product reports something different and it cannot be used in an audit to validate what the taxpayer put on their return. Let's put something in place that makes it better, clearer, and corrects some of the issues. So here we are today.
Yeah. Interesting. I know just more, what I really love is I love the practical questions, people that, in terms of crypto tax reporting, what percentage of the population will involve a crypto tax transaction reported on this year's tax return?
It's been going up. So I think for 23, 6 million people reported crypto in some way or another. Oops, sorry, I apologize. My phone alert. 6 million people, I think, about reported it, which went up from about 2.5 to 3 million. And I'm not sure how many reported now, but this is what brings us to the other issue that I've run into when I've met with a lot of traders. They say, I have all my crypto. It always goes onto a hardware wallet. It goes onto a cold storage wallet. It goes wherever it goes. So nobody knows we have it. But this is where the issue comes in. If you look up at the Justice website, the DOJ, there is actually something went out to all the exchanges and products that require KYC, even the payment products such as MoonPay, etc. 1,000 John Doe letters went out to KYC exchanges and products. And these John Doe letters from the IRS, signed off by a judge, said, you need to give the IRS the information of the U.S. citizens or nationals, anybody who has a U.S. Social Security number, and say that they have crypto, that they've bought crypto. And so I believe there were, at that time, because it's been, at that time it was around for 10 years almost, I think they received feedback from most of them. And they have a list of almost close to 50 million people who have touched crypto. I'm not saying they still hold it, but who have touched crypto at one point or another. Now, do they know if the people still hold it? No, they just know they touched crypto. And so they have all that information. So now, whether you report it or not, whether you have it on your cold wallet or not, the IRS knows you touched crypto. They don't know how much you have. They don't know what you have. They just know you touched it. And so that's what they're basing any future audits on is, we know you had it. We got the confirmation from the exchanges and the products. And that's what audits will be based on. And since 21, there's a little checkbox on your return, right? That says, did you trade crypto this year? Digital currency? Yes or no? Now, if you say no on it and they know you traded it, you lied on a federal tax return. If you read that little fine print when you sign it, it tells you very clearly, you're swearing that this is all true. Or if you check yes and you reported it, they might still take a look at it. But I think they're mostly going to go after the people who have never tried to report it in the first place. Either way, the problem still becomes, even if you tried your best to report it and you use any of the products on the market, they're incredibly inaccurate. And there's just no way anyone will pass an audit. Now, passing an audit can go both ways, right? Because one of the main products overstates significantly in income and gains. Another product understates significantly. So if you use the overstated product, you might get a refund. If you use the understated product, you're going to owe taxes and penalties and interest. So that's where we're at this point.
The next question, it sounds like the number is going up, and crypto is, I think, it's a lot of wealthy individuals touch it because I think for mainstream, it really, but so talk about what are the common crypto tax filing mistakes that one should be aware of if they're filing this year?
So what I have seen, and I think it's a lack of knowledge on a lot of accountants' parts. For example, I've seen people report if crypto was stolen or you had a large loss, they will report it. They will report it as especially stolen crypto. We just had the breach again, $1.5 billion of crypto stolen. And so it's getting reported inaccurately. It doesn't get reported on a Schedule A, as a theft or casualty loss. It gets reported as a capital loss when it really wasn't. Then the issue is you're trying to report as best as you can. The important part is you need to, if you use any of those products, and again, let's pretend they're accurate, you need to connect every single one of your wallets and of your exchanges. Anything that you use to transact or hold crypto has to be connected. So one of the issues that I've seen too is people forget, or some of the products allow you to have features. So an example is if you get audited and you're a business owner and you say, I can just send you my QuickBooks reports, and the IRS will say no, because QuickBooks is something that can be manipulated. I can go into QuickBooks and change anything, even if I have my bank accounts connected. And this is the problem with the products as well. If you report, and I think you still should report and do the best you can to report, because I don't think you should be faulted for misreporting when you try, because there is just nothing out there that will make it accurate. The IRS shouldn't fault you for doing it the best as you can, considering that since 23, we've made the SEC, the IRS, and the congressional committees aware of the flaws in these products, and they've done nothing about it, because in their mind, we don't regulate them. We don't have to say anything. Then they can't fault the taxpayers for the millions of users of these main products to try and use them and report. So do your best to report. It doesn't mean it's right, but do the best you can. But also do not, in these products, use the features to edit your transaction. What is one of the biggest things of the blockchain? Block is built. That block can never be changed. Okay. So now if you download your transactions to these products, there's an edit feature. You can edit the date. You can edit the time. You can edit the value. You can edit the currency. You can edit every single aspect of that transaction. Don't do that. Do not do that. Do not create any edits. It will immediately invalidate anything you've done.
Interesting. Yeah. And follow-up question, because I know this is there's so many different topics. For example, what are the top mistakes CPAs make when filing crypto tax returns? Let's say you compiled everything, you gave it over to your accountant, and what mistakes are they making when filing crypto tax returns?
A couple things. So on one hand, I can't really fault any CPA for not doing it right, because again, how are they supposed to, if you have active traders, they have thousands of transactions in a year on different chains, on different wallets, on different exchanges. There's no way a CPA can go through. It takes me, and I've done this for the last 3 years. If I go manually through accurate and raw data from the blockchain directly, not CSV files that you can download from each of the products, those are completely inaccurate, but the actual raw data directly from the blockchain, it takes me 2 weeks to manually calculate 20,000 transactions. So there's absolutely no way that any CPA during tax season can do that. But one thing that needs to be avoided is asking your clients for CSV files. And taking CSV files are the most inaccurate from anything, whether it is Coinbase, MetaMask, Robinhood don't even get me started on their CSV files. Any of these products, CSV files are completely inaccurate. And that was the discussion we had with the IRS, because we asked them how they do the audit. what did they say? They say they asked for CSV files. We've proven to them that CSV files are lacking pertinent information, which makes the entire calculation inaccurate. Okay. So don't ask for CSV files. I think honestly, if you want to keep yourself safe, ask them for the report from any of these products. Again, they're not accurate at this point, but that's your best bet to report something that encompasses all their information.
Yeah. Interesting. Yeah. And along the same line of what's interesting is there's potential for AI to come in and really clean things up, especially with blockchain data integrity and tax compliance. And you're talking about hardware wallets. You got data from the exchanges. So what role does AI play in your tax reporting solutions for DeFi Tax?
So it's funny you ask, because I am not a fan of AI in tax. Okay. I have tried. Okay. I've tried multiple different so-called AI products for taxation. I have taken a lot of my CPE question and ran it through these programs. Not a hard question, right? And every single one scored between 55 to 68%. And when I said, recheck the questions, just questions, not even algorithms, just the questions, right? They changed the answer. So that shouldn't happen. It's very clear, yes and no question, very clear, multiple choice. So I'm not the biggest fan of AI. Will we integrate AI in our product? Yes, but we will more likely integrate it for certain features, but not for the actual calculations and algorithms. Okay. That is something that I don't think AI has gone far enough, because there's a lot of if this, then that, but that if this, then that is not depends on every single wallet and exchange. We have 2,500 wallets at a minimum. We have over 168 exchanges. We have thousands of blockchains. What that means is you would have to be able to find out every single this, then that option and teach it to the system, because the system is not going to completely understand how every single product names their own internal transaction type. So there's so many, and it changes so frequently that I think it would be very hard with upkeep. Even Coinbase has consistently changed the way they're categorizing, the naming transactions. I don't think right now, at least, it is not a feasible option. I wish, because it would make my life a lot easier, but I don't think it is, because we've tried it in multiple occasions with different companies, and I've tried multiple products, and I just don't think it's feasible at this point.
I know Coinbase is partnered with, I think it's Crypto Tax, something. It's a
calculator, and they endorse CoinShacker.
Yeah, which is interesting. And so essentially, this sounds like the Wild West. And basically, obviously, there's people committing tax fraud, but
yeah, and some do it purposefully, and some they try their best to do it.
Yeah, and then majority basically don't mess with the IRS, don't and do it correctly. Pay your taxes, file your taxes. But sometimes where you're in this gray area, especially with this new area, understanding a IRS crypto tax audit, what should you be aware of? How should you prepare? And talk about that.
Let me backtrack for a second. So you just said the two products that are connected to that are endorsed by Coinbase and MetaMask. Let me give you a case study, okay, that we've been using, and that is also going to be published. I have a wallet with 300 transactions. I connected to product A, and then I connected to product B, endorsed by Coinbase and MetaMask. That same set of transactions, product A tells me, and this is the exact numbers. Product A tells me I have a capital gain of 24,000 and income of 25,500. I connect the same exact wallet with the same exact transaction to product B. And product B tells me I have a loss of $351 in knowing.
This episode is brought to you by Global X. Since 2008, Global X ETFs has been committed to empowering investors with unexplored, intelligent solutions. Global X specializes in exchange-traded funds that offer exposure to the artificial intelligence ecosystem, including themes like data centers, robotics, semiconductors, and cloud computing. To learn more about Global X's entire suite of ETFs, from covered calls, fixed income, emerging markets, and more, visit globalxetfs.com.
This episode is brought to you by Coffee Mate. After watching this season of the HBO's original series, The White Lotus, this is the tropical getaway I needed. One more pina colada, please.
Hey, you're not on mute.
Oh, I thought I was in paradise. Turns out it was my Coffee Mate. Coffee Mate pina colada and Thai-iced coffee-flavored creamers. Inspired by the newest season of HBO's original series, The White Lotus. For the love of coffee. Try now.
Interesting. Yeah.
This is something anybody can test for themselves. Take a small wallet, take a small exchange, connect it to the products, and see the discrepancies between these two products. That doesn't mean they get everything wrong, but they have big issues in the algorithms. So that's just something to point out, because I think that's an easy way to test. And I know why. I gave these products the opportunity. I said, here you go. Nope, not a concern for them, which is unfortunate, because one, again, overpays significantly if you use stock. The other one underpays significantly if you use it. So now, when it comes to crypto audits, okay, this is the issue we're having. Nobody out there, and I know this sounds, listen, I've asked myself this question a lot over the last 3 years. How do I know I got the algorithms and the math and everything right when these multi-billion-dollar products on the market are getting it wrong? And trust me, I'm the first one who's going to second guess myself, which is why I went to multiple universities, worked with PhDs, worked with professors in accounting and tax that have worked with the IRS and validated every single step of what I'm doing, tested it, beta tested it. I could have launched already, but I didn't, because I'm going to make sure that it's 100% accurate. And I know it is accurate because of all the research and all the peer reviews and everything we've had to validate it. I wasn't going to say I'm going to come out there and saying I'm the best product, like some of these products say, and then I'd fail just as miserably as them. So the problem is, right now, if you get audited, there's going to be like the same way like it was with the ERC credits. I don't know if you remember, they're on the employee retention credits. All these companies came out of the woods and said, I can file the 941 amendments for you and get you all this money back and just pay us $25,000. These companies don't exist anymore. And the IRS says, those are fraudulent. You owe us all that money back. Okay. That's the same thing that's going to happen when the crypto audits is starting. All these companies, all these CPA firms, we also audited 53 of so-called crypto tax experts that you can find on Instagram and TikTok and on the web. We gave them money. We gave them those 300 transactions, paid them $4,000 for them to turn around and run it through one of those products for $100, and then told me, here's your capital gain and loss. And it was completely ludicrous again. And we wasted a lot of money, but we needed to do this in order to figure out if anybody has found a solution. So now you get audited. How are you supposed to defend that what you put on the return, if you put something on the return, is accurate? You got to rely on your tax professional. How is a tax professional supposed to validate this? They can't. If they go to any of the products on the market, they're just going to do the same thing. Pull a report, and the IRS says, this product is not audited. It has features. It has features that are going to be detrimental because they can make it fraudulent. They have inaccurate algorithms. So at that point, it is very difficult to pass an audit and argue against the IRS. I will. I have the licenses. We have the people that can represent you in front of the IRS. I have no problem arguing it because they already know who I am. I've already argued with them. They know my research. I'm more than happy to argue on your behalf.
Yeah. And Leslie, I know because we have to be finishing up. How can people find out more about you, learn from you, and connect with you?
So we are on Instagram and the social media websites. I have people doing that because I'm very quiet about it. And we have our website where you can sign up for the wait list at DeFiTax.us. We're doing some beta testing and we're hopefully launching within the next 3 weeks or so.
Excellent. All right. Well, thanks so much. And that was really interesting conversation.
Oh, no worries at all. I appreciate you taking the time.